So this is weekly commentary 62. So if we go to the weekly time frame. So from the previous weekly commentary, I was favoring a shorter dollar, and we were expecting a shorter dollar to, take out this sell side liquidity pool, and you see how we got caught in a chop. From Monday, I thought, with Tuesday's consumer confidence, we'll probably zap that, but we have to consider where we are now. If we go to the monthly, I want you guys to focus on the last four candles, right? One, two, three, and four, right? This is January, February, March, and April, of course, and now we're going to start May. You see how these candles, just visually looking at how they're sideways, right? This is accumulation, right? Now, if you go to the daily time frame, you see how right now, from the last 2 months, how consolidated it is. Now, I'm still favoring a shorter dollar, right? Now, we have a lot of pent up buy side liquidity. This is a clear trend line here. This gray box, if you go to the weekly, this is a weekly fair value gap. I want to see the run under, this sell side liquidity pool, and see if that can offset accumulation to go higher, right? Essentially, I want to see an AMD, accumulation, manipulation to the downside, and then work our way up to this weekly fair value gap. They want to increase their interest rates, the Federal Reserve. If we go to the FX calendar, Monday, right, we have Euro and Pound bank holiday. We have this, two folders. We have the red one and the orange one on the Monday. Wednesday, we have FOMC, right? We have the fund rate and the conference. This day you respect. I really recommend everyone, right? Don't trade until FOMC passes. Now look at the week coming, right? Look at the news events coming. And we have NFP on the Friday, of course, because it's the first month. It's the first week of a new month coming May. And look at the daily candles. You see how small the daily candles are getting and how they're going back and forth. Wait for a clear side to be favored, right? If you see a run on sell side and displacement higher, you can work your way to this weekly fair value gap, right? Now, going off of the monthly, last year we expanded a lot. I want to see how we open on May, trade down lower, and how that monthly open high low close forms, right? And then you can, from the last weekly commentary, given the monthly open and the daily chart, you can see if you're staying above of it or beneath it, and you can work, and hopefully the daily bias, the daily chart should be a lot clearer. That's what I want going um, into next week, and what I expect for me. Now, one thing I want to help you guys out again, we touched on an old weekly commentary around, maybe 20, 30 weeks ago, but I want to touch on it again. When you're met with this, right, with this consolidation, especially if you're on a funded account and you took a challenge and you get caught in the chop, right? You could have taken the funded challenge here and it looks nice and clear, yeah, hit the fair value gap, go down lower, and then you get caught in this chop. How do you deal with that? Because as a trader, you're going to get this chop. Now, of course, you need to make money, right? Well, of course, you have to exercise patience, but how long should you go without taking a trade as well? Can't go many, many months without a trade. You should still try to look for a high probability setup. Identify the range, right? You see this low, it got taken out, we made a lower low. Now you see how we haven't made a lower low. So find the high before this lower low, the clear high before that was responsible, the origin before the run on this low to make a lower low, right? Anchor your fib. When you get caught in a consolidation and you see it's clear choppy, you're working your way from premium to discount. When the price is in a premium, you can fall back to 1 hour PD arrays and scalp. This is a scalper's market. It doesn't favor swing traders. It doesn't really favor intraday traders that try to trade the entire daily range, because you see how small the candles are. The daily range is small, and you see how when there is some size to the candles, how they wick one way and then go the other way. It shows that price turns very quickly on an intraday level when you see a daily candle doing that. You look at when price enters the premium. Is there a bearish stage offered in the premium of the market, right? Market maker model, perhaps power 3 in the premium to go back. And what you're doing is this. If you do find that, you take a short for a sell side target, maybe hourly lows or an hourly fair value gap, 4 hour fair value gap in the discount. Do not try and aim for this low, right? When you're inside of a consolidation, you go for the absolutely easiest targets, right? You probably won't find, 3 to 4 risk rewards. You might find just only barely 2 to 1s, right? Going from this part of the premium to the discount and the discount back to the premium, given that there's a bullish stage in the discount of the market, right? You won't want to hold for this because the market can turn very quickly. For example, this move here turned very quickly, went back to the premium. If you kept holding, you would have got stopped out break even if you tried to stop, or it would have went and hit out your stop loss. These are things to consider, right? These conditions are tradable. Some people may not like to trade it. Some of you, I understand, are on time limits on your funded challenges, hence why I'm teaching you how to trade this, right? So you'll keep that outlined, and then you'll go on a 1 hour and you'll try and use your Sunday's opening price and your midnight's opening price, and you'll just go back and forth within the range. Look for runs, turtle soups on these highs, 5 minute displacement market structure shifts, and just go for absolutely low hanging fruit. Don't, perhaps even the going for the sell side liquidity pools and buy side liquidity pools may not be favorable. Aim for going to the discount arrays like a fair value gap of the range, for example. Right, those are things to consider. For example, if you turtle souped this high, right, and you got in here, perhaps aim for this fair value gap. Don't try and aim for this sell side liquidity pool. Those are things to consider because you're in a consolidated, ranged market. You don't want to try and aim for the fence. It's likely that it's not going to come, right? Now, if we go to the monthly for euro, you see how it's very similar. We had 1, 2, 3 candles accumulation, and now we have the move higher into a PD array, right? Now, if we get coupled with a daily market structure shift, this is a monthly AMD, right? And you can have a very long-term bias short on euro. Likewise for pound, right? We have this fair value gap. If I just extend it down lower to here, right? You see again, 1, 2, 3 candles sideways. If we can see a move here and coupled with a daily market structure shift, the key is this with your market structure shift. Whatever time frame you're favoring the market structure shift on, it needs to be on time frames higher than that. So for example, for you to get a daily market structure shift, to then to elect to use the look back periods, the data ranges from chapter 1 lesson 5, you have to use time frames higher than that, right? So where do we expect our daily market structure shifts to happen? Preferably weekly, monthly PD arrays, weekly, monthly turtle soups. That's where we expect our daily market structure shifts happen. Likewise, for our intraday market structure shifts, we like to use 4 hour or daily PD arrays, right? Those are things to consider. Now, in saying that, I'm expecting GBP USD to still push up there. Euro still probably can push up a little bit. If we go to the weekly, there's actually volume imbalance, I believe. Yeah, perhaps trade higher and close this gap out. So I'm still favoring the DXY to trade down lower before going higher, right? There is no reason to get bullish on the DXY as of now, right? When you do analysis, there's a big difference between what you want to play out and what the chart is pointing towards. I'd like to be bullish on the dollar as well, right? To get to that fair value gap. Before we get bullish, if I just remove this clutter off the chart, I'd want to take out this sell side liquidity pool. This is, too textbook of a double bottom for retail, right? There's a lot of pent up sell stops at this area or and beneath it. I'd rather trade through that and see how we go, right? For the S&P now, this weekly fair value gap we outlined a few weekly commentaries ago, we tagged into that, and that's institutional order flow entry drill right there. You have that fair value gap, that candle wicks into it and away. Where do you expect the next weekly candle to go for the S&P, right? We had a bullish fair value gap, traded down into it, moved away from it, and coupled with, a clear daily AMD. Where do you expect it to go on the weekly? Do you expect it to be a bullish week or a bearish week? Open low high close or open high low close? This is the start of everything. You see a market like this is the preferred price action you kind of want to see, what you want to see on the dollar. If you look at something like this, the last previous price action, and you compare it to this, right? It's a lot harder to tell where the candles are likely to go because we have no PD array that we're coming from. We have no AMD that we're coming from. It's just consolidation, right? From here, it's a lot easier framework to work in because now you can favor bullishness over bearishness on the weekly, right? Because where did price come from? A bullish PD array. Where is price likely to go? This buy side liquidity that we've, lined out from for quite a few weeks now, we can work our way to this volume imbalance and then to this rejection block and buy side liquidity above the high here. And then you go and you build your weekly profile. You see, was Monday, let the Monday pass. See, did Monday make, a clear distinct low, or can, Tuesday, early on in the day, Tuesday run it, and then we can be bullish from, the PM, the AM session of, Tuesday onwards, right? That's the conditions I'd favor in the market. You need to have a clear weekly and daily direction. If you can't sieve out a clear daily and weekly direction, what type of trade are you trying to take, you know, for the day? Are you trying to go in to be a buyer or seller? Because every single day, what I try to do is this, right? I try to identify straight away, am I looking to buy or sell in the market? If I'm trying to buy or sell in the market, straight away, I'm working either in the premium or discount of a range. I'm not waiting to go from, I'm not trying to 50-50, okay, I see displacement. Every single day, you'll probably get displacement offered both ways. The difference is one displacement going to be manipulative, one's going to be, the distribution move of the day. You don't want to get caught in the manipulation displacement. That's why you need the context from the higher time frame, right? Never go into your trading day without trying to favor one side. When you go in with a plan for the day, there's that cliche saying, if you fail to prepare, then you've prepared to fail. If you go in without a plan to be a buyer or a seller within the day, you're going to be very, very lost. What type of signatures are you waiting for? What PD arrays are you waiting for? You're just waiting on, essentially just working off of hope, and it's not really sustainable. How long can you go? Yeah, you might get a few lucky winners, but that's all it is. It's just a lucky winner, right? Um, Going to the bond market, because we're going to get FOMC this week as well. You see, it's still very consolidated. This is a very tight range. FOMC on the Wednesday, the fund rate, and the conference where they're going to speak on the sentiment of, what they want to do with the rates and going forward with the US economy, is going to hopefully move this market. The reason the DXY is looking very slow, right? Take this fractal of price and look at the bond market. The bond market is like the engine to the financial market. The bond market is slow, the DXY is going to be slow. You know, indices likely to range, and foreign currency is likely to range with the dollar ranging as well. When this market moves and it's in line with the DXY, you get low resistance liquidity runs. What does that mean? It's very easy for the DXY to move. It can very easily run to points of liquidity, essentially the high and low. Let's say this is bullish. Let's say we get strong displacement on the bonds, and the bonds clearly are like bullish institutional order flow, entry draws to go higher and whatnot, respecting bullish PD arrays and breaking buy side liquidity. And if you see the DXY is also doing that, you're going to see that the runs on the euro to go lower is going to be fast and rapid, and that's the kind of price that you want to entertain. When you get them consolidated, you're going to see prices resistant, right? It's going to wick, and you're going to get caught in ranges like this, right? You see how it's reluctant to take out this buy side liquidity, and it's just ranging. That's because you're in high resistance liquidity run territory, right? And it's not, high probability scenarios, and that's when you have to go for very low hanging fruit, like I showed you guys with the fib. Find your most, the most recent dealing range, the most recent price range, right? Look at if so, for example, we had this lower low and we have this high, and we're just working between it. You see how we're not breaking the high and the low? This is all internal liquidity, right? You want to see which way is likely to be favored. Wait for the break of one clear side before you can say that I'm bullish or, bearish for the weekly, the monthly. For now, work your way between the range of this high to this low, right? So I hope this weekly commentary helps, consider this, right? This high to this low. If you've got time on your challenge, and you don't want to lose to the time you have to take trades, this is how you have to do it. Premium to discount, bearish stages in the premium, bullish stages in the discount. Let's go back and forth between the premium and the discount, right? Don't try and hold for the external, previous week's low, previous week's high. Just go and use intraday targets, right? Perhaps, a 2-to-1 risk reward of aiming for the discount or premium of the current daily range, something like that, right? So I'll catch you guys in the next one. Also, my room refurbishment is nearly done. The lesson chapter 6 lesson 3 on niche is, then I'll get to do it. I'd like to resume, the zooms. I like to break up the zooms. I'll do one with the newer guys and the guys that are in the normal group chat, and then I'll want to have Zooms with the interbank group. The interbank group essentially is the guys that have made their way past a lot of the stages of the mentorship. I ask for notes as well. You can't just tell me that you've done all of chapter four. I would ask for the notes. The notes have to be good as well, because I can do a different type of Zoom. The focuses will be better. There's no point of chapter four guys and interbank guys being on the newer guys Zooms, because we'll probably be covering chapter ones and two and that stuff, and those guys will be well versed in it. Chapter four guys will be working on trade plans, stage entries, that type of stuff. So yeah, hopefully this week we can resume that. I'll drop a message in the mentorship channel when that resumes, hopefully. So I'll catch you guys in the next one, and take care of yourselves.